Good morning and welcome to THUB Capital, THE Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to THUB Capital's THE Investors Lounge weekly podcast. Today's date is the 27th of October. Let's dive into the week's top market news. Strong momentum in European markets, rising PMIs and signals of stability in the UK. European stock markets, last week, recorded a solid performance, with the Pan-European Stocks Europe 600 index closing 1.68% higher in local currency terms. Optimism was shared across major national bourses, with Germany's DAX gaining 1.72%, Italy's FTSE MIB adding 1.44%, and France's CAC 40 up 0.63%. Leading the charge was the UK's FTSE 100 index, which achieved a notable rise of 3.11%. This market scenario developed in parallel with mixed but encouraging economic data. In the UK, the headline annual inflation unexpectedly held steady at 3.8% for the third consecutive month, contrasting with expectations from analysts polled by FactSet for an uptick to 3.9%. Concurrently, core inflation, a measure of underlying price pressures, showed a slight easing, falling to 3.5% from 3.6% in August. Following this data, financial markets significantly increased their bets on an interest rate reduction as early as December. Surprisingly, retail sales in the UK expanded for the fourth consecutive month in September, rising 0.5% sequentially, surpassing the predictions of economists FactSet, who had forecast a 0.4% contraction. The growth was driven by strong demand in the online jewelers segment, partly due to gold demand, and in the non-store retail and computer/telecommunications retail sectors. In a clear reversal from preceding months, Eurozone business activity reached its highest level since May 2024. Purchasing Managers Survey's PMI indicated that business activity hit a 17-month high in October, supported by the strongest increase in new orders in 2.5 years. According to provisional, seasonally adjusted data from S&P Global, the HCOB Flash Eurozone Composite PMI Output Index reading was 52.2, up from 51.2 in September, and ahead of consensus estimates of around 51.1. Specifically, the services PMI climbed to a 14-month high of 52.6, while the manufacturing gauge rose to 50.0 from 49.8, marking an increase for the eighth running month. A solid increase in German output contributed significantly to this result, although business activity in France continued to fall for the 14th consecutive month, recording the fastest pace of decline since February. Finally, consumer confidence in the Eurozone continued to improve for the second month in a row. Confidence rose to -14.2 in October, the highest level in 8 months, up from -14.9 in September. This result beat market expectations of -15.0, according to an early estimate from the European Commission. For the European Union as a whole, consumer sentiment also increased, adding 0.8 points to -13.5. Now our insight into alternative markets. European private equity, record valuations and the liquidity challenge. The European private equity pay market is currently in a phase of strong momentum, marked by a notable increase in transaction value, but also by increasingly stretched valuation dynamics. The financial analysis of the past week highlights 4 critical trends that investors and M&A practitioners must navigate: the surge in valuation multiples, the undisputed dominance of the TMT sector, growing difficulties in exiting investments, and the shift toward democratizing fundraising. The European buyout market has shown a significant rebound, with recent market signals confirming the strong momentum indicated by a 54% growth in deal value to $212 billion across Europe 2024 context. The most telling indicator of this competitive environment is the surge in valuation multiples. The average EV/EBITDA in Western Europe has reached record levels, estimated at around $12.10 times 2024 data. This escalation suggests fierce competition for high-quality assets. Even with monetary tightening making the cost of debt more burdensome, the vast amount of undeployed capital dry powder and the revival of M&A activity are keeping valuations high. Consequently, value creation can no longer rely primarily on financial leverage, but must be increasingly driven by superior operational strategies and organic growth, pushing GPs to act more as business builders than just financial engineers. In terms of capital allocation, the technology, media, and telecommunications (TMT) sector remains the primary target in Europe, both by transaction volume and value, with the industrial and chemicals sectors also attracting substantial investments. This focus on TMT reflects the relentless pursuit of companies offering exponential growth potential, robust operating margins, and cyclical resilience. In these transactions, fundamental financial statement analysis shifts its emphasis from mere historical review to projecting future cash flows. Valuation is often dominated by the DCF discounted cash flow model, used to estimate the value of high-growth assets based on assumptions of aggressive revenue expansion and capital efficiency CapEx. This makes the interpretation of sector-specific risk factors and the quality of earnings highly crucial. While the buyout market thrives, the exit market, where GPs realize returns by selling portfolio companies, is facing significant liquidity challenges. Although the total value of global exits has shown signs of improvement, general partners GPs still hold a considerable volume of assets. This situation has led to an increased reliance on secondary markets and a gradual re-emergence of IPOs as an exit route. A tangible sign of this difficulty is the lengthening of holding periods, now averaging around 5.7 years 2024 data. This extension signals caution, driven by macroeconomic uncertainty and a reluctance to sell at valuations that fall short of expectations. For the portfolio analyst, risk/return management is critical, as scarce liquidity and delayed exits directly impact the capital returns distributed to limited partners LPs. A final structural trend making headlines concerns fundraising. A growing portion of future pay capital is expected to come from high-net-worth individuals HNWIs and the so-called democratization of alternative investments. This phenomenon is pushing managers to develop new fund structures, such as evergreen funds, which offer partial liquidity to accommodate retail investors. From a financial analysis perspective, this requires a recalibration of the risk/return assessment for illiquid investments. The diversification of the LP base mandates greater transparency and careful evaluation of the marketability of assets, fundamentally influencing the investment and exit strategy of the funds themselves. In summary, the European private equity landscape reflects a complex market dynamic where optimism for the buyout recovery and continued interest in the TMT sector clashes with the reality of high valuation multiples and liquidity challenges in exits. The increase in multiples, for example, $12.10 times EV/EBITDA, compels general partners to focus on operational value creation rather than solely on financial leverage, while the lengthening of holding periods average $5.70 years makes risk/return analysis at the portfolio level crucial. Simultaneously, the influx of capital from HNWI investors introduces new fund structuring requirements. To navigate this scenario, M&A practitioners and investors must maintain rigorous fundamental analysis (DCF), multiples analysis, balancing the appetite for growth with cautious management of return and liquidity expectations.
Thank you for listening to this episode of HUB Capital, THE Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about THUB Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the THUB Capital team.